In this video, I want to break down a very important concept to keep in mind when you're investing in real estate in a rising interest rate environment. So you've probably heard someone say by now, oh, it's a terrible time to invest in real estate. The market's going to crash because the interest rates on 30-year mortgages, 15-year mortgages are through the roof. They've doubled or tripled, and they're at 5, 6, 7, 8 or higher percent. It's a terrible time because you're going to pay a ton of money in interest. And if you're not a savvy investor, you can fall victim to that thinking of, oh, high interest rates means I shouldn't buy. But if you understand this concept I'm going to walk you through, you're going to get excited. You want interest rates to go up to 30% because you understand as an investor how to make the most money over the long term. So let's get right into it. The two most important things when you're investing in real estate is, number one, the price you pay for the house. Right? The price you pay for the house is fixed. You cannot change that. That is what it is, and there's nothing that you can do to change that. So you want to focus obviously on understanding the market, what are comparables. Hopefully a real estate agent can help you, but there's not a whole lot you can do, and it depends on market conditions. And what's the second biggest piece and factor is your interest rate. So that is insanely important to understand because, okay, we're in a rising interest rate environment. These are related. These are somewhat have a relationship to each other. And what generally happens is as interest rates increase, the price of the home decreases. Why is this? Because people have the same amount of money to put out for a house on a monthly basis. So the housing market, if this goes up to 8, 9, 10, 12% interest rates, home prices have to come down because demand's going to go down and it's going to need to level out to enable people to buy real estate. Obviously, there's tons of factors, but we're just talking generally, right? Inventories at play, what type of market, what type of job growth. But we're talking generally speaking, as interest rates go up, your prices should come down. And that's great news because why is this fundamental concept so overlooked? Because your price is fixed. Interest rates go up. You want the highest interest rate because you want to pay the lowest price for the house possible. So, and the fact is, oh, but I'm going to pay a low price with high interest rates. But what can you change? You can always change an interest rate. Once a market and the economy goes into a downturn, the federal bank will essentially drop interest rates to near zero. And what do? You go into your interest rate and you lower it because you can refinance mortgages. This is what everyone does who's an investor and a savvy person, is that they just take the lower price on the house. Thank you, rising interest rates. Yes, they understand they're going to be paying a high interest rate, but it's going to relatively be the same. And then once a market downturn happens, which inevitably will, because markets and the economic cycle is filled with booms and busts throughout entire history. So interest rates will eventually crash. You'll be able to refinance, and you got the house for a very low price, and your interest rate is now very low. And now you'll get even more cash flow on your property. So really do not get intimidated by rising interest rates environments. Do not fall victim to the common narrative of, oh, it's a terrible time to buy a house. That's just a person who's thinking small and not thinking long-term and as a strategic investor, which you will do now because you're watching this video. So hopefully you enjoyed this content, this simple concept to really make a strategic, better decision for yourself financially, and applaud rising interest rates as a real estate investor because these are great news that you'll lower the thing you can never change, and that's price. And then you'll just refinance once the market eventually downturns and the federal interest rate really drops to near zero, and you'll be able to get 1, 2, 3% interest rates once again. So hopefully this video helped, made some sense. Please share this video with someone who's to you said it's a terrible time to buy, and use this as confidence to secure a great deal and position yourself for long-term wealth creation. Thanks for listening to Live to Learn USA. If you like my content, there's more like it if you subscribe to stay up to date with my latest stuff. Take care.